Ripple XRP. The market is missing what's happening now. Welcome back to XRP Spotlight, your trusted source for XRP news, crypto market analysis, and the biggest stories shaping the future of digital assets. Today we have a critical update because while the market is focused on falling prices, many investors are completely missing what is happening behind the scenes. Bitcoin continues to slide lower, Ethereum is under pressure, and XRP has been caught up in the broader crypto sell-off. At first glance, the situation looks ugly. Bitcoin is sitting near key support levels. Ethereum continues bleeding value, and XRP has dropped sharply as traders react to fear and uncertainty. But beneath the surface, something much bigger is developing. Regulatory progress is accelerating, XRP ledger upgrades are advancing, institutional interest remains alive, and major infrastructure improvements are quietly laying the foundation for the next phase of growth. The market is staring at red candles while missing some of the most important developments we've seen in months. Today we're going to break down everything happening right now and explain why many investors may be focusing on the wrong things. The current crypto correction has created a wave of fear throughout the market. Investors are watching prices fall and wondering if more downside is ahead. Whenever markets enter these periods, emotions begin to take over. People stop talking about technology and start talking about price action. They stop focusing on adoption and start focusing on short-term charts. That's exactly what we're seeing right now. XRP is down, Bitcoin is down, Ethereum is down, and social media is filled with panic. But experienced investors understand that some of the best opportunities often appear during periods of uncertainty. History has shown repeatedly that the strongest developments in crypto frequently happen when nobody is paying attention. While traders are focused on daily price swings, builders continue building, developers continue improving networks, and institutions continue preparing for the future. That's why today's developments deserve attention, because the fundamentals continue moving forward even while prices struggle. One of the biggest stories currently flying under the radar is the upcoming XRP Ledger 3.2.0 update. On the surface, it may seem like a routine software release, but it actually represents something much larger. The XRP Ledger ecosystem continues maturing and evolving. Security enhancements, infrastructure improvements, and network optimization may not generate flashy headlines, but they are essential for long-term adoption. One particularly interesting aspect of the update involves the continued effort to distinguish the XRP ledger from Ripple as a company. The core software powering the network has traditionally been called Ripple, but developers are transitioning toward the name XRPLD. This may seem like a minor change, but it reinforces the decentralized nature of the network and helps separate the technology from the company itself. For years, critics have attempted to blur the lines between Ripple and XRP. Updates like this continue strengthening the narrative that the XRP ledger is its own ecosystem with independent utility and growth potential. At the same time, regulatory developments continue moving faster than many expected. The Clarity Act remains one of the most important pieces of legislation affecting the digital asset industry. For years, crypto investors have asked for clear regulatory frameworks. Now lawmakers appear to be moving closer toward providing exactly that. Discussions have shifted away from whether digital assets should be regulated and toward how they should be regulated. That's a massive difference. It signals that policymakers are no longer debating the legitimacy of the industry. Instead, they're focused on creating the rules necessary for long-term growth. This shift in mindset represents a major victory for the crypto sector as a whole. Investors who understand market cycles know that regulatory clarity often acts as a catalyst for institutional participation. When institutions know the rules, they become more comfortable allocating capital. That's why many XRP supporters are paying close attention to every development coming out of Washington. The progress being made on crypto legislation suggests that momentum is building behind the scenes. Multiple committees continue working through the details, combining different proposals into comprehensive frameworks designed to support innovation while maintaining oversight. While nothing is guaranteed until legislation officially becomes law, the fact that lawmakers continue advancing these discussions is encouraging. Many industry participants believe that the probability of meaningful regulatory clarity arriving within the near future has increased significantly. If that happens, XRP could be among the biggest beneficiaries due to its focus on payments, financial infrastructure, and institutional use cases. The market may not be pricing in this possibility today, but that doesn't mean it isn't important. In fact, some of the largest market moves often occur when investors suddenly realize they've underestimated a developing trend. Another major development that many investors are overlooking involves institutional conversations around XRP's role within diversified crypto portfolios. Ripple recently highlighted perspectives from major industry figures discussing how XRP fits into the broader digital asset landscape. This is significant because institutional investors rarely place all their capital into a single asset. Diversification remains a fundamental principle of portfolio construction. Bitcoin serves one purpose, Ethereum serves another, and XRP occupies a unique position between the two. XRP combines efficient payment capabilities with advanced network functionality, creating a distinct value proposition that appeals to different types of investors. As institutions continue exploring digital assets, the idea of diversified crypto exposure becomes increasingly important. That means XRP doesn't need to replace Bitcoin or Ethereum to succeed. It simply needs to secure its position within a growing ecosystem of investable digital assets. One of the most fascinating developments involves XRP supply dynamics. Recent data indicates that millions of XRP tokens have been leaving exchanges. Under normal circumstances, investors would expect this type of activity to support prices because fewer tokens available on exchanges generally reduces immediate selling pressure. Yet despite these supply movements, XRP's price continues facing downward pressure. This disconnect has confused many investors. The explanation likely comes down to broader market conditions. Supply reduction alone isn't enough. Strong demand must accompany it. Right now, market sentiment remains cautious, limiting the impact that supply changes might otherwise have. However, this situation could become extremely important later. If market sentiment improves while exchange balances continue declining, the combination of reduced supply and increased demand could create powerful upward pressure on prices. The concept of a supply shock remains one of the most discussed topics among long-term XRP supporters. The theory is simple. As more XRP moves off exchanges and into long-term holdings, available supply decreases. If demand eventually returns, buyers may find themselves competing for fewer available tokens. That's where significant price movements can occur. Today's market conditions may not be ideal for realizing that scenario, but the underlying mechanics continue developing. Investors focused only on daily price action may completely miss the significance of these trends. Sometimes the market takes longer than expected to recognize important developments, but that doesn't make those developments any less meaningful. Meanwhile, the broader crypto market continues facing competition from another rapidly growing sector, artificial intelligence. Massive amounts of capital are currently flowing into AI-related investments. Some of the largest technology companies in the world are raising unprecedented amounts of money, attracting investor attention and capital that might otherwise flow into other markets. This capital rotation has impacted everything from stocks to cryptocurrencies. When investors see exciting opportunities in one sector, they often reallocate funds from another. That's likely contributing to some of the weakness we're seeing in crypto today. However, this doesn't necessarily represent a long-term problem. Market leadership rotates over time. There will be periods when AI dominates headlines and periods when crypto captures investor attention. Understanding these cycles can help investors maintain perspective during volatile markets. One project receiving growing attention at the intersection of crypto and AI is Flare. The recent announcement that Flare is now available on Robinhood represents a meaningful step forward for the ecosystem. Robinhood provides access to millions of retail investors, expanding Flare's reach significantly. More importantly, Flare continues positioning itself around several major growth narratives, including decentralized finance, interoperability, data services, and artificial intelligence integration. While much of the market remains focused on immediate price action, projects building infrastructure for future technologies could become major beneficiaries when sentiment improves. The combination of crypto and AI remains one of the most compelling themes in technology today, and investors are beginning to recognize the opportunities emerging at that intersection. The evolution of crypto taxation and regulatory frameworks also deserves attention. Reports indicate lawmakers continue working on legislation addressing staking rewards, mining income, and broader digital asset tax treatment. While taxes aren't the most exciting topic in crypto, they represent an essential component of industry maturity. Institutional investors need clear rules. Businesses need clear compliance requirements. Retail investors need certainty regarding their obligations. The creation of comprehensive tax frameworks signals that governments increasingly view digital assets as a permanent part of the financial system rather than a temporary trend. That shift in perception could have profound implications for long-term adoption. Another factor affecting current market conditions is the massive liquidation activity occurring across leveraged trading positions. Billions of dollars have been wiped out as traders using leverage have been forced out of positions during the recent correction. This process often creates exaggerated price movements because liquidations trigger additional selling pressure. However, liquidation events eventually run their course. Once excessive leverage is removed from the system, markets frequently become healthier and more stable. Experienced investors understand that leverage-driven corrections can create opportunities for patient participants willing to look beyond short-term volatility. The current environment is also reminding investors why security and reliability matter. Recent reports involving vulnerabilities discovered within certain blockchain ecosystems highlight the importance of robust network design. While no system is completely immune to risk, networks emphasizing security, simplicity, and proven infrastructure often have advantages during periods of uncertainty. The XRP ledger's focus on efficiency and reliability continues attracting attention from those prioritizing stability and utility over speculation. As the industry matures, these qualities may become increasingly valuable. What many investors are missing right now is that the foundation for future growth continues strengthening despite the market downturn. Regulatory progress is advancing. Infrastructure upgrades are arriving. Institutional conversations are expanding. Exchange balances are declining. Utility-focused ecosystems continue evolving. None of these developments guarantee immediate price appreciation, but they contribute to the long-term health of the ecosystem. Markets often move ahead of fundamentals and sometimes lag behind them. Today's disconnect between price action and underlying progress may eventually resolve itself in unexpected ways. The reality is that crypto remains one of the most innovative sectors in the world. Volatility is part of the journey. Corrections are uncomfortable, but they are not unusual. Investors who focus exclusively on short-term price movements often miss the bigger picture. The biggest opportunities frequently emerge when sentiment is weakest and confidence is lowest. That's why understanding what's happening beneath the surface matters so much. While the market remains focused on fear, the foundations for future growth continue being built. As we close today's update, remember the headline because it captures the situation perfectly. The market is missing what's happening now. XRP may be down today, but development hasn't stopped. Regulation hasn't stopped. Adoption hasn't stopped. Institutional interest hasn't stopped. The story unfolding behind the scenes is far more important than the red candles dominating today's charts. Markets move in cycles, sentiment changes, and opportunities emerge when least expected. Thank you for joining us on XRP Spotlight. If you enjoyed today's update, be sure to like, subscribe, and turn on notifications so you never miss the latest XRP and crypto news. Let us know your thoughts in the comments below, and we'll see you in the next XRP Spotlight report.